So as you guys know, my favorite type of investing is long-term, and there's a few things I've learned on the way that have really helped me out when it comes to investing long-term, and today I'm going to share those with you. How's it going, guys? Ryan here, and today I'm sharing with you 5 essential tips for long-term investing. Out of all the trading and investing styles, long-term investing is where I've found most of my success. And today I just want to share with you some of the key tips that I've found improve my chances of success when investing long-term. But before we get into that, guys, please remember to like this video. It helps me out so much, and leave a comment down below about your favorite type of investing. And remember to please always subscribe for the latest and greatest content on this channel, and hit that notification bell so you get notified when new videos are uploaded. So without further ado, guys, let's get straight into the video. So 5 essential tips for long-term investing. And the first tip that I have for you guys is keep your money in lots of long-term stocks, but keep money aside as well to capitalize on opportunities that pop up. Often, particularly when you're interested in the micro cap space, there are new opportunities popping up all the time. And something I like to do to keep myself interested is to do some medium to short-term trades with a separate set of money. This allows me to set and forget those long-term investments, but keeps me interested in what's going on in the stock market, as well as I don't get antsy and I don't get fidgety and I don't get bored with those long-term investments. So basically, I put a bit of money aside to capitalize on opportunities that I can see in the short to medium term. But if they do eventuate into other long-term opportunities, I will keep the money there, but it's more for trading. And what this does allow me to do is then, as I said, set and forget those long-term shares, and I'm not tempted to start trading those when they go up and down all the time. Although it's a valid strategy, it does come with a lot more risk. Now, my second tip, guys, is to attend as much information sessions as possible. Attend webinars, attend conferences, attend the annual meetings or company presentations that are put on by the shares you're invested in. This is the best way to keep informed with what's going on at the time of your company. And as well as that, you also get to meet with other investors, potentially the MDs or the directors of these companies, and ask them questions face to face and get a real vibe for who the management are. One of the main things I focus on is that the management are crucial to the success of any company long term. They're the ones who are driving the ship, and you need good captains at the helm of that ship to drive it in the right direction. So as a result, getting a better understanding of the individuals who are in charge of your company is extremely beneficial. Now, my third tip is to spread your risk, and this doesn't necessarily mean spread your risk across lots of different sectors, lots of different industries, but spread your risk amongst different stocks. I've been caught out in the past where I put all my eggs in one basket and it has gone down the drain because that stock just hasn't paid off, unfortunately. So as opposed to absolutely blowing up your account by investing all your money in 1 or 2 stocks, focus on a variety of different stocks at the time. You don't want to spread yourself too thin that you don't make any returns at all, but you want to spread yourself across a few good stocks that you've done your research on and that you believe have genuine growth potential in the long term. That way, effectively, you're mitigating your risk, but also not over diluting your portfolio at the same time. So you're almost getting the best of both worlds. I'd tend to say focus still on the areas that you know the best. So if you know mining stocks are best, focus on that. If you know biotechs are the best, focus on that. You don't necessarily need to go outside the sector you're in, but keep in mind that if you do spread your risk, then you're going to be in a much safer position overall when it comes to a long-term investing portfolio. Now, my fourth tip is to keep up with all the latest news and economic events going on. So every day I recommend you just log on to news websites, you log on to social media and just see what's going on. You don't need to spend lots of time on it, but effectively you want to have an understanding of what's going on, whether it be political situations, economic situations, natural disasters. All these sorts of things can affect your portfolio. And even though they don't affect your shares in particular, they will affect the stock market overall. So the impact may not be felt physically or have anything to do with your stock, but your stock may fluctuate in value as a result of something occurring in the world. That's just the nature of the stock market. And it's good to understand why the stock price is fluctuating when you are holding long term. It can be hard to see a stock fluctuate up and down 50, 30, 20%, whatever it is, on a fairly regular basis if you're not looking at the bigger picture and understanding why it's occurring. So I really implore you guys to keep up to date with what's going on in the world at the time, and you'll generally gain a bit more experience over time when it comes to understanding what will and what won't impact your shares. So for instance, some obvious ones are if you're investing in gold, for instance, if the gold price goes up, your stock's probably going to rise in value. But one of the more interesting ones is that if, for instance, at the moment, Donald Trump is the president of the United States, if he tweets something, that can affect the stock market, in particular when it comes to the Dow Jones, for instance. His tweets can actually have a decent impact on this. So as a result, your stocks will be affected in some way, shape or form, whether it be a minor way or a major way, because of silly little things like this. So it's just good to be aware of what's going on at the moment. Now guys, tip number 5, and this is something a bit more left field, but it's to keep yourself distracted, keep yourself interested in other hobbies, have things to do. For full-time investors, that might mean you have to find something else to do to consume your time. Otherwise, you're just sitting in front of your desk all day, watching your stocks, researching them, that sort of thing, and you start to obsess over them, you start to overanalyze, you know too much. And as a result, any little thing that occurs can affect your judgment. It can give you really bad anxiety if your stock's dropping and you can see red numbers on your screen. It's not going to help you out a lot. What you want to do is focus on your long-term investing plan and stick to it. And if you're focusing on the day-to-day fluctuations all the time, this is not going to be helpful for you. So find some hobbies, find some other things to do. For me, I'm fortunate. I have a full-time job, so I'm still focusing on that most of my time. I've got my long-term investment strategy. I check up on my shares on my lunch break and that sort of thing, but I don't need to focus on them 24/7 because I understand what's going on to the level that I need to and not obsessing over the day-to-day price fluctuations of these shares. So that's been a huge thing for myself. And when I started out, personally, I did watch my stocks all the time and it was not healthy, guys. I do not recommend that you do that at all unless you're a day trader and you're in and out of stocks constantly and you need to be reactive. Then if you're long-term investing, you don't need to worry about that sort of thing, you know? So don't focus on your shares that much. Keep in mind that you need to focus on other things as well going on in your life, whether it be hobbies, whether it be another job, whether it be family, friends, all those sorts of things. Just make sure you have something to do, guys. So, and I'm wrapping up the video there. I hope you enjoyed it, guys. If you did, please remember to leave a like and leave a comment down below about some of your long-term investing tips that you found have been incredibly influential for yourselves. And what sort of trading strategy do you like? Do you like the short-term day trading or do you prefer longer-term style investing? And remember to subscribe to the channel to keep up to date with all the latest content. And with that, guys, I hope you have an awesome day. See you next time. Cheers.